Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So, silver and gold have been pretty stagnant right now. Silver is at $18.12. Gold is just below $1,500. But we all have this theory that precious metals and including other assets and investments could be manipulated to a more drastic degree than is put in the spotlight, in the public eye. Now, we did hear JP Morgan manipulating Bitcoin prices last year. We heard Merrill Lynch recently manipulating the silver prices with placing false buy orders on these exchanges. And I found this article posted yesterday from SilverSeek. The link will be in the description, but it goes into this. It goes into these theories on how much or to what degree is the precious metals world being manipulated. How speculative is it? It's really interesting, and this is definitely stuff I want to be putting out there because we need to be aware of this. It's definitely stuff that it could be much more substantial than people try to sweep under the rug, especially if you're looking to invest into this from a new perspective, or even for more experienced stackers. So I want to definitely share this with you, and I'm curious what you guys think about this as well. But anyways, let's jump into the article. So, with the silver price now experiencing a correction after running up for more than $5 in the past 3 months, we now see more articles suggesting the price manipulation as bullion banks hammer the metals. There continues to be in this notion put forth by many precious metals analysts that the bullion banks, especially JP Morgan, are controlling the gold and silver prices. Now, I would not be surprised if JP Morgan would be one of the prime suspects. We did see them manipulating cryptocurrency prices to a very, very large degree. A couple years ago, I covered that. So anyways, while I have no doubt there is an intervention in the precious metals markets, we must remember that the Fed and central banks are manipulating the entire market with money printing, bond purchases, debt issuance, and zero or negative interest rates. However, the current price of gold and silver, even with the supposed market rigging, are still priced higher than their overall average production cost, which is an interesting point to say. Also really interesting to put out that they are basically manipulating the entire market with the money printing, the bond purchases. That is interesting to think about. Unfortunately, the fact that the prices of most goods and services are based on their cost of production tends to be overlooked by the majority of the analyst community, whether they are from mainstream or alternative media. I can assure you that if you consider the price of a standard pair of jeans, not a high-end name, it would be the base on the entire cost structure from beginning to end when it finally shows up in the retail shelf. No company can sell a product for less than it costs for an extended period of time, or they will go bankrupt. That's obvious. On the other hand, the market would not pay 100% more than the cost for a typical pair of jeans if the competition was selling it at 10% over cost. Economics 101, investing 101, fundamentals. It's a fundamental, perspective to put on it. And now, if we were to understand the manipulation of the market, we have to realize where the extremely overvalued or inflated prices are contained. As I stated many times, the majority of stocks, bonds, and real estate are where the focus of the Fed and central banks manipulation price have been directed. But why? Because this is where 99% of the market has invested its funds. Thus, the overwhelming majority of goods and services, including precious metals, are not overvalued. But this is not the true for the majority of stocks, bonds, real estate. These supposed assets are extremely overvalued, which means this is where the greatest degree of market intervention is directed. So it's an interesting thing to put. Precious metals are extremely undervalued, so they do have a different category than stocks, bonds, and real estate, which are in most times pumped up and oversold to these people, which does make sense. And that also would make sense. That's where the most intervention or most corruption would be happening, because that's where the most money is. People are heading towards the dollar, so not something that's theoretical compared to the dollar. So it definitely would make sense that real estate, bonds, and stuff like that would be more manipulated. But anyways, if we understand that the price of most goods and services are tied to their cost of production, here's a chart of Pan American Silver's estimated break even and its profit loss per ounce. So here's a chart. So it's showing this was back in 2011 when silver was around $50 an ounce. But here's the chart showing everything. If you want to see the different years, down here it's $35 an ounce in 2011. Right now it's $15.20, and it shows this is the white line is realized silver price, green is estimated silver income per ounce, and the blue is estimated breaking even. So you can see that it is pretty, they do correlate pretty close, except when silver broke out. But we see right here, it did even go negative. And from 2013 to 2015, this is also when silver had a pretty nice, a nice gap as well in appreciating value. But well, the white line represents the silver price and Pan American silver received that year. In the green, red prices are showing estimated profit loss per ounce. So when the silver price shot up to an average of $35 in 2011, Pan American Silver enjoyed a healthy $9 profit per ounce. However, if we looked at the majority of the years, Pan American Silver made a profit or loss of about $1 to $1.50 an ounce. So should we expect Pan American Silver to earn $9 to $10 profits per ounce a year for an extended period? That depends on how the market is valuing silver currently, and not for quite a while. Silver has been valued based on its cost of production, and we can clearly see this is shown for a long-term silver chart. So I've showed this chart on my channel before. So this is going all the way back to 2000. So it shows, the average prices back, way back in the early 2000s. It shows the blue, the line, the lower rising and dashed blue trend is the baseline for the cost of production. Then we see the average price here, and this is the line right here, the trend line you can see. So the lower blue dashed trend line represents the silver cost of production. While it was likely much higher in 2011 and 2012, obviously when silver was $50, the silver cost of production trend line provides a good floor in the silver price. If we look at the Pan American Silver chart above, we see that in 2004, the company lost an estimated 10 cents an ounce. In the first quarter of 2019, 6 months, it earned 40% profit per ounce. So if the silver price chart represents the reality taking place in the silver industry, we look at the metal as a commodity based on the cost of production. Silver is more than just a commodity. It's used to make solar panels and iPhones, which I do want to pause real quick. I was going to make a video pretty soon talking about how silver is more of an asset than a commodity. I see gold as being more a commodity. It's used more for jewelry, more for necklaces, more for bullion. Silver is much more incorporated in the everyday world for solar panels, dental alloys. It's used for so many different things in the medical world. There's silver nanoparticles. There's colloidal silver. It's the most highly conductive metal for thermal conductivity and electricity. It's used for so many different things that it's not just a commodity. So anyways, it goes on to say silver is also a store of value and money, but the market is not valuing gold or silver as money currently, but it will. Setting the record straight on silver manipulation. So here's one of the main parts of the article. As I mentioned at the beginning of the article, several analysts are suggesting that the bullion banks are manipulating the price of silver, almost as if the price was only metal being manipulated. Of course, they throw gold in there as well. Yes, banks have indeed used spoofing and other trading tactics in the gold and silver markets to their own gains, which I've mentioned with Merrill Lynch. But all that manipulation does not change the simple fact that the current price of silver is above the cost of production, as it's undervalued with intrinsic value. Now, we would be one thing the bullion banks and their shrewd precious metals traders were pushing silver down to $8 to $10 an ounce. That would likely bankrupt a large percentage of the primary silver mining industry. However, we have not seen that. Now, I've also talked about this in my channel. It's actually kind of cool to read these articles because all the strong points he's making, I've broken down and made entire videos talking about. Like if you want to hear the Merrill Lynch stuff with manipulation, if you want to hear the spoofing with, JP Morgan about the mining with, all the miner stuff I made a couple weeks ago. Like I've broken down a lot of this and made entire videos talking about these specific things if you want to check those out or if you're interested. But it is definitely stuff to be aware of and to be, just educated about and informed about, because it's really important in the world of precious metals. But anyways, that's a good point though, because right now miners don't see silver as profitable as gold. They're focusing more on gold, and they're finding silver from focusing more from lead and zinc, only finding silver by accident. They don't have any main silver mines, and it's only the only main silver mines or the focal silver mines are from individual companies, but that would likely bankrupt a large percentage of the primary silver mining industry. And right now we do see silver supply extremely low. It's actually been diminishing by the hundreds of millions of ounces over the last 3 years, with the top 3 producers, Mexico, Peru, and Chile, all focusing more on gold. Furthermore, this is the idea that the massive amount of paper silver trading is substantially above the physical supply of the market. Thus, several analysts state that the paper trading does not provide an accurate measure of physical silver market. While that may be true, it also is the case for the other metals and energy. Silver is not the only asset class with a tremendous amount of notional trading value. if we look at the next series of charts, you will see the monthly notional trading value for each. Stock charts, volumes of the metal and oils taken from U.S. futures markets. All I did is calculate the monthly notional trading volume was to multiply the peak monthly volume by the contract size and price. So let's start with silver. A silver contract in the COMEX is for 5,000 ounces with 225 million in value in August and $18 an ounce. The notional trading volume is 20.2 trillion. So you can see right here, specifications, the contract 5,000 ounces, silver price used is $18. And then you see the trend right here line, silver's monthly notional trading volume, 20.2 trillion. 225 million in volume right there. So please understand, I am just making a simple calculation here, and with the other charts, no need to get too sophisticated. With silver trading volume in the chart above may include the smaller 1,000-ounce mini, but I am not sure. So in August, when silver shot up more than $2, the notional trading volume was a whopping 20.2 trillion. Sounds insane? Well, let's look at the copper. So here's talking about copper, which has actually been down lately. Copper's been in the red for a couple weeks or months now. It doesn't show it on here, but we've definitely seen copper in the more bear as it's been falling. Not like the other precious metals. Even platinum, palladium have been rising with gold and silver. But here's copper. So it's talking about copper volume back in 2018 was 250 million contracts. It traded at 17.5 trillion in notional volume. So we can plainly see that silver's 20.2 trillion in notional trading volume isn't that extreme. Now when we compare it with copper, let's take it a step further and look at how much WTIC oil, or U.S. Tex Intermediate, traded in a single month. So the market traded an astonishing 101.5 trillion in notional value in the WTIC oil that month. If we thought the silver trading at 225 million in monthly volume and copper at 250, well, oil blows that through 1.75 billion contracts in a month. That takes the cake. And lastly, we have gold. Last month, gold notional trading volume was a stunning 135 trillion. So while it is true that gold is trading more than oil in monthly notional trading volume, they are all quite high. Furthermore, that top gold miner's cost of production is about 1,200 an ounce at 1,500. They are now making decent profits regarding the 900 million rounded higher in volume trading in markets. And that's definitely important to take note of, because when I was making those videos about the miners and why they aren't focusing on silver, it's because they're putting all their focal point with gold, as gold is more profitable. They're looking for what makes the biggest bang for them. And as silver was, especially when gold started to boom from the start of U.S.-China trade wars, silver wasn't climbing as fast as gold was. So they were obviously abandoning silver mines and focusing more on gold, which makes sense for these points taken, you know, at gold, such a highly priced asset. If the production is 1,200 an ounce and gold is at 1,500 or higher, they're making decent profits. But silver being around $18 range, if it goes up to 19, you can see how it's not as much. So it's interesting to think about. I'm not going to go. You guys can check out the rest of the article if you want. The link will be in the description. I just wanted to share this with you guys because the cost of production is also interesting to see when you're looking at silver manipulation, to see the context behind the scenes and what's going on behind the scenes also with these companies, and what really is the main motivation. Just like if you're trying to solve a crime case, what is the motivation for a company or for someone who's committing a crime to be doing that? What's their main source of motivation? And this is the same type of perspective you want to go to when you're looking at these companies, especially looking at the miners, how much they're digging out, also correlating that with the price. I think it's interesting, but I'm also curious what you guys think of. But if you did enjoy this video, make sure to smash the like button. Like I said, the link will be in the description if you want to check it out for yourself. I'll probably post another video or two today, so stay tuned for that. But anyways, I'm going to wrap this video up here. This was Silver Slayer. Thank you for tuning in. I'll see you guys soon. Peace.